this is Pat Walker at Mission Winners, and I'm making a video for Jason. Jason, you got a good question. It had to do with, and this is related to, again, a question you posted on the VIP feed about position sizing. And it's so important. A lot of people think, oh, it's just one size fits all. I'm always going to buy 300 shares of every stock. I'm always going to buy 500 shares or 1,000 or whatever. That's not necessarily true. Each chart pattern has risk in it, and we measure risk by that chart pattern, and it tells us how much to put in a stock or how little to put in a stock. And again, why? We have to manage risk. If we don't, we're going to get hurt. So again, what do? There's a few things we can control. We can control the entry. We really can't control the exit completely because possibly a gap down, but we can control risk by position sizing. That's a big one. I'll show you an example, like Amazon. Now, this is an expensive stock, okay? You know, it's like, well, I'm going to buy 500 shares of that and spend $1 million. Okay, fine. But you can see, yeah, it's a big move. It's a big mover. What do you do on something like this? We buy less shares on something like this. Let's do Netflix. Netflix is lower price. We can buy more shares. Now, I've got to share this with you as far as it's a function always. What might be a lot of shares for one person might be relatively small for somebody else. But overall, when looking at the chart pattern, regardless of stock size or price, we still know, hey, I can live, well, heck, fire, Amazon. You could buy, shoot, just 10 shares and you make a frickin' $1,000. You know, I mean, that's how it works with Amazon. Netflix, you could buy more because it's lower priced. But the big story is this, the important moral. Buy more shares on long base, clean and simple breakouts. Buy less shares on swing trade patterns or shorter base patterns. So this was a longer base. So we could buy more of this. Alrighty? That's good. If it's shorter, we would buy less. Let's see if we can find one. Well, NVIDIA doesn't have anything right here. But NVIDIA had a spot right there, and you may have been a VIP when that happened, but right there, look at the volume pickup on that bar, lifting across the 20-day or off the 8-day on a pickup in volume. We bought that right there. Now, is that a really long base breakout? No. So, do you buy a lot of shares? No. But you can buy it and it treats you well. So there's a variable to take into consideration. The length of the base, the chart pattern, the cost of the stock. You put all those variables into it to figure out, what am I comfortable with? Am I comfortable giving 100 shares on Amazon or 50 shares on Amazon? Am I comfortable giving it 50 points? That's $2,500. It's like, yeah, you know, no, I'm really not. Then what do? You buy less shares. Hey, I'm going to share something. You could buy 5 shares on Amazon, and you can make $500 over the period of a good trend. There you go. So just depending on account size, risk. But I'm going to give you some examples to show where you can go a little bit bigger. All right? These are all past winners. Wix, and by the way, the issue isn't, oh, he's bragging. No. That's lame. The issue is, I guess I always look there and say, man, I wish somebody had shown this stuff to me years ago. That's what I'm after. So there's Wix. Nice base, lifted through here. Volume was just so-so, but it was a leading stock in a leading group, and it made a really good move. And there's clean and simple. You could buy more of this. All right? Here's another one for you. I'm going to just slide some in here so that we can train our eyes and mind. Tesla was right here. End of last year. Nice shelf. So we can make this a little bit bigger. No, it won't show. Nice shelf. I think you were a VIP. You know this right here. We owned this right there. Just a nice run. You sell some into strength. You sell the rest losing the 20-day, which is what we did. By the way, you want to see a great lesson? You think we're the only people in the world that know about the 20-day? Look at the drop. Look at the gap down through the 20-day and the volume pickup. The last shares were sold there. Just a nice move. I'm going to show you some more here. Upland. See if this will get bigger. Yeah, there we go. There we go. I'm sorry. Makes it a little bit better. There we go. Upland. Nice long base. Entry right there. Just a nice lift. You can say, well, Pat, that's only good for like 6 points on some of the shares, maybe a little bit more. Hey, 6 points on 24, that's 25% on your money. And again, this stock had great numbers when it went. The key point is this, though. It's a longer base. Here's another one. InMode. Nice clean tops, pushed through on volume, and just kind of marched up. This was from last year. Make it a little bit big. Whoops, sorry. My fault. Let's get back to it if we can. Oh, I hope I'm able to. There it is. Sorry about that. Trying to make the chart bigger so it's easier to see. There we go. Nice top. Volume surged through the pivot and it lifted. Just a nice run. Just a really good run. You could buy more on something like this. Why? Because it's a longer base. Let's do a couple more here, just so we can train our eyes and mind on how to do it. There we go. This should work good. Oh, look at that. Upland. Look at this nice long base. I love that. See, you go big on this. The price is right, okay? They should make a show about that. It'd be a good name for a show, a game show. The Price is Right. But look at that lift. I live for these. I live for these. By the way, this was a keyless stock. Yes, we owned it. VIPs own it. I'm not showing you a bunch of stuff we weren't involved with, okay? Alibaba. You can see right there. Nice long cup and a handle. Volume picks up. Nice march. You can buy more of this. You can say, well, it's $180. You can still buy a little bit more of it. Why? Because it's clean and simple. Clean and simple. That's the key point here. Going to do another one for us. There we go. Made it bigger. There we are, sir. GSX. Look at that long base. Look at that frickin' volume. I think you were VIP when this went. That's the kind you can go bigger on, all right? Longer bases. You can go bigger on clean and simple bases that everybody can see. I'm going to do one more for us. Making it a little bit bigger on the other screen just to let you know. There we go. Now I can drag this in so you can see it. There we are. Match. Look at that. Look at that base. Look at the volume pickup. Lifts off right here, 20, 21 bucks a share. Buy more of this. You can pyramid into it, and it just walks up the moving averages. That's a double. That's nice. That's what we're after, okay? That's all the way back, golly, isn't that hard to believe? That's back in 2017 we had this. Anyway, that is what we are looking for. You go bigger on cleaner and simple bases that maybe aren't as high priced. By the way, I will tell you this, and I can document it. Every stock I just showed you had either earnings up 40% or higher or sales up 40% or higher for 2 quarters average and was in the top 40 groups. That I know for a fact. That's what we're looking for. So anyway, position size. Go bigger. Buy more shares on cleaner, simple, multi-week base breakouts. Buy less shares on swing trade setups. And it will always, that's how we measure risk. Patterns that are less risky, we buy more of them. Anyway, Jason, I hope this helps you. I'm sorry this video was a little bit longer, but I want to do it justice. It's very, very important. You're very important to me. I don't ever want to give wrong information. So I hope this helps, and I thank you very much.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.